The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, everyone. Today is Thursday, February 21st. Again, another episode of CFRN Thursday, where we go over the trade setups, the CFRN trade setups in slow motion. Okay. So what we'll end up doing is in the next hour, number one, I have to go over the disclaimers. So that's why I opened the room up early, just to get that out of the way so we can spend a good full hour in a live environment. So number one, disclaimers. That has to be talked about first. Second, I'm going to go over the trade setup. All right. I'm just going to break it down. You'll know the trade setup, the traditional setup. We'll talk about some of the buzzwords. I'll make some observations about what's going on with the trade setup. And then we'll pop into a live market environment and we'll look for the trade setups. If something sets up, I'm going to jump inside the DOM. The DOM is the tower. Okay, that's this tall thing over here. And you'll see me left click in the green if we think, the market's going up, and you'll see me left click in the red if we get a sell signal. Okay, everything's done on this depth of market or tower. Okay, so you'll see Michael do that in the room. So that's the steal. That's kind of what we're going to go over this afternoon. For those guys that are brand new, this is going to be a great syllabus for you to lean on. All right, because you are going to know the setup. You're going to learn it in slow motion. You'll get a chance to ask questions. And then when you're in the live training room, Michael, hopefully you can absorb what's going on. All right, more of an eyes wide open approach. All right, that's the goal for this afternoon for you guys. The guys that are already returning CFRN members, this is a good chance for you to ask questions. I'm going to make observations on some of the traps that people kind of fall into if they're struggling. All right. So you're going to hear me talk about trending markets. You're going to hear me talk about drawing trend lines. You're going to hear me talk about a few disqualifiers that kind of hit people in the face and get ignored sometimes. Bottom line is, for you guys, you'll get to spend a little more time in front of the markets, learn the personalities of the markets you're trading, and then maybe hear the setup from another voice. All right. And then the whole idea is kind of to get the, tip the scales in your favor. All right. See if we can't turn some things around or answer any questions that you have. All right. So that is the game plan. All right. So the first order of business is the disclaimers. So stand by. Click on this bad boy. And disclaimer number one. There's two of them I'm going to go over. Okay. Again, I don't like to just throw them up, tell you to take a look, and then put them under the blanket and kind of forget about them. The idea is this. I've been around for roughly 25 years, and I've really seen the good, the bad, and the ugly when it comes to trading futures. Okay. That's why I spend five minutes going over this. And the disclaimer is really meant to scare the guys that are coming into our space, the guys that are wondering about what futures trading is all about. Because, futures is trading leverage, right? So with leverage, there comes a lot of risk. All right. So the risk capital that you're putting into the marketplace here has to be capital that you can afford to lose. All right. That's what that means. It means that it won't change your lifestyle if you lose what's in your trading account. Because in the end, you can lose everything and some in your trading account if you're not using stop losses, if you don't have a trading plan, if you're not watching over your trading account, you're not engaged in what's going on in the marketplace, if you're not watching over your own account and any news items that might affect your position. Okay, those things, if you ignore them, disclaimer is going to hit you right smack dab in the face. Okay? If you go down the CFRN path, okay, you are going to have a trading plan, right? You have a set of rules. There's basically four rules, right? You are going to use a stop loss. Every trade has a stop loss attached to it. It's 8 ticks, okay? You're on a 4-tick range chart, so you have to be actively engaged in the market. You have to be in front of the screens. You have to be staring at it, okay? There's aggressive risk management going on, okay? And lastly, you'll learn this along the way, but they don't trade around news reports, okay? They let the reports come out and then trade afterwards, okay? Just to kind of eliminate some of that uncertainty or that risk involved, okay? So, again, in the end, like I said, the disclaimer is out there. It's made for all the new guys that are entering into the space. But the CFRN members are practicing a lot of these things that prevent this disclaimer hitting them in the face. Okay? However, in the end, if you're doing all the right things, okay, that means you're in front of the markets, you have a stop loss in place, you're actively engaged in what the market's doing, you have a stop loss in, there is a risk of an uncertain news item coming out and the stop not getting elected. So you would have unlimited risk. In the end, that's always a possibility. All right. The good thing is that in the end, you'll be in front of the markets. You'll be in front of a DOM, and if all fails, you can hit this exit at market and cancel button. If all fails. Okay. So again, that risk disclaimer's out there. It's there for a reason. And it involves, again, trading futures involves risk. It's a leveraged market, and you can lose everything and some in your trading account. And we don't like to, turn our back to that. Okay? Usually by the time people get to CFRM, they're numb to this already. They've already been trading. They've been in this room and that room and this guru and that guru. They've been through the battle. Okay? Like I said, usually the disclaimer is one to kind of put in front of everyone who's brand new coming in. So, second disclaimer is my relationship with CFRN. I represent, let me say it this way. What you see here is the platform. That's DtPro. Okay. The indicator set that you see on the platform is property of CFRN. Okay. Their indicators are built inside the platform. So if you decide to go down the CFRN path, you say, hey, sign me up. Any money that exchanges hands, that'll be between you and them directly. Anything on their website, videos, members areas, Logic 247, Thursday night workshops, the concierge alerts, you'll reach directly out to them. Okay. My role in this is I support the platform. The indicators are built inside the platform. So if you have trouble turning them on or getting them applied, or you have problems downloading the platform, you're going to call me directly. Okay. If we have to, we'll do a one-on-one go-to-webinar to get you up and running and squared away. Okay. If you need help with the trade setups, I'm in the room every single morning. Okay. I'm in the background. I'm silent. I really don't say too much unless Michael leaves the room. If someone has questions, I usually pop in and address them. Okay. If you have questions about the setups, that's fair game. Raise your hand, give me a call, shoot me an email, and I'll critique or answer any questions you have. Okay? I'm qualified to do that. That was the reason why I started the CFRN Thursday bit for an hour, is because there was a lot of hand raises and a lot of questions, and people needed a slowed down version of what was going on. So I started this, I recorded them, and it seems to help everyone out. Okay, so we'll continue to do that as long as people keep coming into the room and need help. Okay, so that's kind of how the relationship is. No, they don't work for Daniels Trading. No, I don't work for CFRN. There is a line in between. Okay, a lot of guys will call me up and say, "Hey, I can't get a hold of Mike or Dwayne. Can you text them?" Or guys know they can call me at the desk and I'll pick up. All right, so that's comforting to know that whoever's picking up the line knows the platform, knows the setup, knows what you're doing, probably knows your account number. So if there is any problems, I can take care of it right away. Okay, so that is the second disclaimer. Okay. I think that covers that. Yeah, that covers it. All right. So just so we're all clear that I have, that's the stuff I have to talk about. Okay. Now, I couldn't find my other slides, so I'm going to have to use this, but I think this will work. Okay. So now I'm going to go over the rules, the trade setup. Okay. All right. So number one, the time frame. We are on a 4-tick range chart. Okay. 4-tick range chart. So if you have DtPro, chances are you might be on an hourly, might be on a daily, you might be on a 5-minute. The bottom line is, if you want to get to the 4-tick range chart, you have to go in the upper left-hand corner of the chart where it does say 5 or 10 minutes or hourly, and hit this drop-down box here. Go down to custom, a box opens up, and select a range bar and make that one look like a 4. All right. I'm on an ES chart right now on a 4-tick range. Your chart should just look like mine. Okay. The first trap that people fall into is they get down to the custom, they select tick bar, but they make that 2 look like a 4, and then the chart kind of looks goofy like this. If you're staring at this is wrong. Okay, you fell into the first sand trap. It needs to be a 4-tick range bar, and the R in parentheses is kind of the tip off. Okay, that'll tell you're on the right time frame. And the deal with the 4-tick range chart is the height of each candle is 4 ticks in height. Okay, some look smaller, larger. Okay, they're all 4 ticks in height. So inside the training room, you're going to hear Michael on occasion call out highs and lows. Okay, he might be calling out highs and lows of a particular candle. What he is doing, because he knows the height of each candle is going to be 4 ticks in height, he can be proactive. All right, so that means he can place orders in anticipation that the market is going to take off or break down. So what he's doing is he's buying it above the market. Here's the current market price here. Or he's selling it below the market. Okay, so he's entering on a stop in the event that it takes off, and he's entering on a stop if the market breaks down. Okay, so he can do that knowing that the height of each candle is 4 ticks in height. So he can be proactive and be a little bit predictive. Okay, so when the training room first started, there were some trades where the market took off and people were scratching their head. How did you get in that one? How did you get into this one? And that's how he's doing it. He's buying it and selling it on stop. So if the market does take off, okay, he's going along for the ride. Okay, that's his game plan. If that happens during the session here in the next hour, I'm going to show you how to do that in real time. Okay, the magic equation to that is plus or minus the high or the low. Just take the high or the low and add or subtract 5. And that's the exact number you're going to click on inside the dome. Okay, and the execution are right clicks. Okay, we're right clicking in the green and we're right clicking in the red if we're going to execute that type of trade. Okay, so again, I'll go over that if it appears. Okay, All right. So that's the time frame. We're on a 4-tick range. Okay. Now, the setup. Load this up a little bit further here. Okay. Get the marker out. This red and blue line here is referred to as the MA1. Okay, the MA1. The green line is referred to as the BBC. Okay. Together make up step number 1. Okay, which is the bullish or bearish cross. Okay, so when the MA1 is red and crossing the BBC, that's a bearish cross. If the MA1 is blue crossing the BBC, that's a bullish cross. The one that's highlighted here is a bearish cross. Okay, and it's a bearish crossing because the MA1 is red. So now we're looking for shorting opportunities. Okay. Now note I didn't say go short, go long, go short. Okay, we're looking for opportunities to go long or short, because after the cross, we are expecting step 2 to happen. All right, which is this. After the cross, at some point, the market is going to eventually gravitate, flag, trade to, or eventually hit the BBC or that green line. This is the normal thing for the market to do after the cross. Challenge the green line. So not only are we looking for a touch, okay, we're looking for a touch, but also a close in the direction of the trend. Okay? All right, so we're looking for a close or a red candle, because the MA1 was red, and we said the red is associated with a bearish cross, so we're looking for a red candle or a down close. Okay? If this was a bullish cross, then we'd be looking for a test of the green line or the BBC, but then we'd be looking for a blue candle or a green candle. Okay? A close in the direction of the trend. The one that's outlined here is a bearish cross, so we're looking for a red candle. That is step number 2. Okay? Now, once 1 and 2 are activated, then our eyes kind of gravitate toward the slingshot, which is the oscillator portion of the trade. And the trade really exists down here. Okay? Because here's how it works. More buzzwords here. The red and blue line inside the slingshot is referred to as the cycle. Okay? The cycle. The green line pulling away, this referred to as the green line. Nothing fancy. But here's how it works. What the cycle is telling you is, look, we are in a downtrend in this market on a 4-tick range chart. We're in a downtrend. So it's setting the tone. Okay? This price action up here, the normal thing, pulling back to the BBC with the down close, with the green line pulling away, combined, okay, is saying this. This price action up here is suggesting it might be just a air pocket or a pop-up in this ongoing downtrend. That's what this separation or divergence down here in the slingshot is suggesting. Okay? So when you see step 2 with the separation or the divergence, okay, that's a buzzword you'll hear Michael talk about all the time in the trading room. Okay, that is step number 3. This separation or divergence, along with this price action, as long as we're making lower lows, or if it's a bullish setup, if we're making higher highs, okay, there's nothing else to filter out but to go inside the DOM and get short or execute a trade. Because in the end, here's what we expect to happen. We expect this green line, as it does here, ultimately come down and challenge the cycle. In other words, this green line comes all the way down until it closes the gap. It's at this point where it closes the gap and pinch together is when we close out the trade, because the normal thing for the market to do is to come down and make a new pivot low. This is the point we get out. The reason is, and that's why I said the trade setup exists in the slingshot, because here's what we expect to happen. The green line is going to pull away and close the gap, pull away, close the gap, and repeat itself until the cycle turns blue. Okay, so we're looking for bullish opportunities, and now the green line is below the cycle and pulling away and closing the gap. All right, so in a sense, we're selling this air pocket, selling this air pocket, selling this air pocket, buying this dip, and buying this dip. As long as we're making lower lows, which means we're trending, and I'm going to highlight that this afternoon. Okay, if we're making higher highs or lower lows in a bearish market, we're going to be looking to buy and sell these little air pockets. Okay, that's the idea. And Linda, I'll come back to you, okay? And everyone can see me and hear me, right? Because I know Bart was talking about he just want to make sure. Okay, cool. All right. So that's the game plan. All right. So the deal is this. You're not learning to pick the top and pick the bottom here and trade it from point A to point Z. You're learning to take a piece out of the middle. And along the way, you're going to move in the stop, move in the stop, move in the stop. Because every trade has an 8-tick stop attached to it. Okay? So if you're brand new, if you're trading the gold and the crude, you guys know you're risking $80 if you're dead wrong per contract. If it's more like the soybeans or the S&P, it's closer to $100. And if you're trading the mini Dow, it's closer to $40. Okay? Each contract is separate. They're different. They all have different contract sizes. Okay? So you'll gravitate toward those markets that kind of fit your personality in the end. Okay? Big question I always get is, how many markets should I look at? Michael's looking at 4 or 5 or 6 of them in the room. I don't mind you doing that in the beginning, because I think ultimately in the end, you'll probably gravitate toward 2 or 3. Okay? Right now, if you're brand new, you're just trying to absorb as many setups as you can. Okay? That's what you're trying to do. You're trying to get consistent, right? You're trying to get profitable so you can move on to some live trading. Okay? So that's it. That is the setup. Okay? Hasn't changed. The screenshot that you see printed here was set back in 2012. I think Michael made this up. I just grabbed the screenshot from him. Okay? So a big question that we always get is, has it been form fitted, changed, tweaked? Hasn't. That's why I talk about this one, because it hasn't changed. I know some have been created and developed along the way by other members. That's fine, but this one has been around from day one. Okay? So that's it. Let me shut this down. All right. So I'm in demo mode. Okay? The other thing is, if my phone starts buzzing, I'm going to have to put you on hold and hit the mute button. So don't get upset. I'm just letting you know ahead of time. All right. So Linda, to answer your question, okay, we want to wait for the down close in step number 2. Okay. Step 1 lights the match. Okay. That says, hey, we need to be looking for shorting opportunities. Okay. You're looking for step number 2. You're looking for the market to do the normal thing, which is pull back to the BBC. Okay. While that's going on, you're going to get in the habit of drawing a trend line. Okay. And you're going to hear me talk about that. Okay. A down close, okay, would be a red candle. You want ideally everything to be the same color. A red MA1 and a red candle. A down close is a red candle. Okay? And you'd like to have a red cycle. And preferably a red MA1. Okay? So ideally you want everything to be the same color. If you got a bullish setup, you're looking for a blue MA1. You're looking for a blue bullish cross, blue cycle, everything to be the same color. As soon as you see the red candle, that is a down close. Okay, it's got to close. We'll go over that. You'll see it in live action here. Okay, and then hopefully that'll answer your question. All right, so here we go. We're looking at the S&P. This is the 4-tick range. The first thing I want you to do, it will be moving, correct? So watch this. Okay, it's the first thing. The first habit I want you guys to get into is hitting the zoom out button right here. It's the red magnifying glass. Okay, and the reason we're doing this, because sometimes you get hypnotized by what's going on in the room. It's a big picture, right? And so this, okay, has all the variables, right? It's got the bearish cross. The MA1 is red, crossing the BBC. The market did the normal thing. It pulled back to the BBC, and Linda, here's your down close. And the cycle is red and blue, but the green line is pulling away. You have that separation or divergence. It's got all the nuts and bolts to it. Okay? So the question is, are we trending? So what I'd like you guys to do is get in the habit of hitting the zoom out button. Because frankly, after zooming out, okay, that's zooming out, zooming in, zooming out, there was support here, right here. And we had a pretty significant bounce off of that level, okay? So seeing this action combined with this, that wouldn't be an easy and obvious trade for me to take. In fact, I would have sat that one out. Yep, look at what happened. Well, maybe Michael gets that one. I didn't, okay? The point is, I want you to get in the habit of zooming out to make sure that we're trending, okay? That will keep you out of some of those bad trades. That's one of the pitfalls that one of the traps I see people fall into, okay? Zoom out and get to see a little bit more. All right, so let's move on to crude, okay? Notice the first thing I do is zoom out, okay? Right now, the crude is doing the normal thing, right? It's pulling back to the BBC, okay? As I said earlier, get in the habit of drawing trend lines, okay? Why do we do that? There's two reasons. Number one, we don't know if it'll get back to the BBC and do the normal thing, right? It might have so much bullish momentum, it won't get to the green line and just take off, right? So if you get in the habit of drawing that trend line, if that does happen, you're in a position to just come back into the dome, left click, and take action. Okay, that's number one. The other reason is, look what's happening down in the cycle. That blue line, that blue cycle is now turned red. So now it's not the right color, right? I said we want everything to be the same color. If we're looking for bullish opportunities, we want that cycle to be blue. It's red. So that's a warning flag that, hey, something might be changing here, okay? So now it's starting to water down the probabilities, okay? If you want to stack all the probabilities in your favor, you want everything to be the same color, okay? It's turned color on you, so the trend line now is required. Not only is it required, but we have to have a close above the trend line before we can take action, okay? Again, two reasons why we draw the trend line. We don't know if it'll get to the BBC and it just takes off. If it does that, we're in a position to go inside the DOM, left click, and take advantage of it. The other reason is, if that cycle turns red on it, this trend line is required. You already have it drawn, so you're not at the last minute trying to draw a trend line. okay, and fumbling around, okay? So that's why we do that. Okay, now as you notice here, it didn't have enough momentum, or didn't have enough to get back to the BBC, and that was the up close above the trend line. Okay? That's why we do that. All right. Now the question is, and this, again, I'm going to hammer this, are we trending? Notice what I do, say zoom out, get in the habit of zooming out. This was an old top here, right? So to me, that's resistance. Okay? Not so straight, but the idea is we broke that old top here. We are making some higher highs. Okay? Is it trending? I'd say yes. Is it the easy and obvious one? No. Okay? Personally, I'd say I'd like to see it spend a little bit more time above resistance here. Okay? We have dynamic resistance point printing here. All right, I'd probably like to see a little bit more above that. Okay? But again, that is the reason why we draw trend lines. So habit number 2 to get into. Okay? Number 1 is get in the habit of zooming out. Okay, that means looking at more. Okay, don't change time frames. Don't go to the 5 to 30, the hourly. Just zoom out. A couple clicks. The other thing is to, as soon as you get a cross, a bullish or bearish cross. Okay, let's go back to that S&P. Okay, as soon as you get this cross here, your next order of business should be to left click on the trend line. Activate the trend line. Because, why do we do that? Because we're looking for the market to do the normal thing. The normal thing is to pull back to BBC and fail. And sometimes it doesn't. And so we have to get in the habit of drawing them. Okay? And the other reason, the cycle might turn color on us. Okay? All right, let's find something else to get crazy with. Let's go to the gold. This is April gold. All right? Notice the first thing I do is zoom out. And what's interesting about this is pretty easy and obvious. It's stair stepping down, so it is trending. Okay? The normal thing for the market to do is pull back to the BBC. That was accomplished right here. That close, okay, is referred to as a gravestone doji. That's a bearish candle. So Linda, if you're looking for a red candle or this gravestone doji, all right? So we have a couple things going on there. Now the cycle. It's blue. That's no good. It's watering down the probabilities. Not only that, it's flattened at the midpoint here. Okay? Faced with that, no trade. Okay? No trade. Again, the market does a normal thing, gets back to the BBC and has the down close. Gravestone doji lights that match. Our eyes gravitate toward the cycle. The cycle is blue, so that automatically says a trend line has to be drawn. We need a close below the trend line. Ironically, we don't. But not only that, the cycle is flat and at the midpoint. Okay? So there's a few negative things going on there that should keep you out of that trade. Okay? So right now, no trade. Move on to the next one. Natural gas. I'm going to go to April. All right, an interesting thing going on here. Okay, number 1, the first thing that should be on your sheet of paper, number 1, are we trending? Zoom out, zoom out. Okay. Again, you see this. Zoom out, zoom out. Top here, top here. Okay. It's not trending. Okay, it's not. This looks like it does, right? So let's cut this up. Okay, because there's some things going on there that I like. Number 1, put your DOMs down. Don't get excited. Just watch. MA1 is blue crossing the BBC. I'm looking for bullish opportunities, correct? I'm looking for longs. What do we do next after that cross? We engage the trend line. Why do we do that? Because we don't know if the market is going to get to the BBC and do the normal thing. Okay? The other thing is the cycle might turn color on us, right? So the trend line will be required. Okay? So we draw this trend line here, and we're drawing this trend line here. Okay? In both examples, close above the trend line, close above the trend line. The cycle is blue. It's got a nice slope to it, right? And we have that separation. Okay? Not surprising the market did what it did, given what I'm seeing here. Now, fast forward to what we see now. The market does the normal thing. Pulls back to the BBC. Linda, here's your up close. It's a green candle. And not only that, it closed above the downtrend line, which was required because the cycle was red. All right? However, as I pointed out, 1, 2, 3, are we trending? The second thing to take note, this is a big trap people fall into. People see this, the touch, the close, and the close above the trend line. Okay? They did all the right things. They got excited and got long. Okay? So they got long on the close of this candle. Here's the problem. The cycle now is the wrong color, which is watering down our probability, and it's starting to curl over at a 45-degree angle. That is a disqualifier. Do not push any buttons when faced with that. Okay? Why? Why? Because when the market is giving you this different color on the cycle, it turns a different color and starts curling over. What it's suggesting is we might be having a cycle reset. In other words, the market's been moving up, moving up, moving up, moving up, and then at some point it's going to actually start creating a larger correction. Okay? And it might just do a larger correction, then take off again. All right? But it's saying, hey, we have a larger correction here. Be on the lookout. All right? So don't get on this one. Okay? Because this is telling you something might be changing. Okay? So keep an eye. That's a big trap people fall into. Keep an eye on the cycle. The color of the cycle, if it turns color, okay, that's okay as long as it's flat. So hopefully we find something that does. Okay? And look, it's taken off here, so what? That's going to happen. But a lot more times than not, it's going to fall apart and you're going to get stopped out. All right. All right, so same thing that's going on in crude. See how the cycle's curling over? Okay, maybe that's suggesting we're going to pull back here a little bit. Okay, so let's stand at parade rest there. Let's go to the currencies. Okay, number one, are we trending? Yeah, I like the action. Okay, starting to head down here. Okay, the cycle is not in a position to get short, so the euro is off the table. Okay, we're flatlining right now, so it could go either way. British pound. Here's a good example. A market that's trading sideways. If you're not sure whether we're trading sideways or trending or not, keep an eye on the support and resistance dots. If they are side by side like this, okay, this is a good clue, okay, that we're trading sideways. Okay. Ultimately, we broke the sideways channel, and ultimately I'd say we're trending. And the market did the normal thing, pulled back to the BBC, and we had the down close. So actually your first sell was right here, because this was red, and we had that bearish separation. So with the pound, ultimately what we would expect to happen is the green line to get into the cycle and the British pound to make a new pivot low. Okay. So Linda's bringing up a good question. What about this? All right. Thanks, Arlene. The support dots. Okay. You can trade into support and resistance, okay, on this traditional slingshot setup. Okay. As long as there's enough space in between here, fine. Game on. Okay. Actually, you should get excited as if we start printing support here and then we break dynamic support. Okay. But that's fair game. All right, now Arlene's talking about the ES, so let's go over there. Must be going lower. All right, perfect. Thank you. Trend line drawn. Okay, that's how your trend line should look. Okay. Observation number 1, watering down the probabilities. Observation number 2, it's starting to curl up. All right. So keep your DOMs down. But here we go. I am going to, just to show you, don't worry, one sec. Okay, so a blue cycle, okay, and a downtrend, okay, requires a trend line to be drawn and a close below the trend line. This is what Michael is doing. If the high is 27.72, then the low must be 27.71 even. He is right-clicking at 27.70.75. Okay, let me adjust the trend line here, and I'll go over I'll review it. Okay, so here we go. If the high is 72.5, okay, the low must be 71.5. He's going short at 71.25. Okay, take the high and subtract 5. That is the exact number you click on. Okay, is the ES trending? Yeah, it sure is. That's a trend down. Okay, what's the bad thing about this trade? The cycle is blue and starting to curl up. This is a trade I would not take, but I want to demonstrate some execution on the DOM. Okay, so again, the high is 72.5. The low will have to be 71.5. So 71.25 is our number. 71.25 would be a close below the trend line. Okay, so let's see. Now remember, the trend line started like this, off of these two green candles. Okay, I had to adjust it for that candle, and then I had to adjust it for that candle. Okay, that's how it started. We'll adjust the trend line until the market gets into the BBC or the green line. Okay, so let's see what happens here. Okay, so we're looking for a shorting opportunity. That's an order right there. That's the Michael proactive way of doing it. Okay, if it makes a higher high here, we're going to change that order. So stand by. Remember, the higher or the low, add or subtract 5. Okay, so if the high is 50, 1, 2, 3, 4, 5. That's the order you place. Okay, so stand by. Again, keep your hands off the mouse. Okay, the fact that this is curling up is potentially a disaster here. It's not an easy and obvious one. Okay, but I want to play with the DOM with you guys. I wanted to show you that. Okay, because that's how Michael is doing that. Okay. Here we go. Maybe we break down here. Come on, break down. I want to also show you how to move the stops and all that other stuff, especially the guys that are brand new. So what I did is, notice what I created here was a bracket. So I clicked this Tinker Toy triangle, top of the DOM here. Notice how the bottom of the DOM opened up. If you check sell stop, you check buy stop, right click, factor in ticks, right click, factor in ticks, and make this an 8, the factor. That is putting an 8 tick stop attached right behind our entry. Okay, so that's one less button you have to push, and that's a good thing. Okay, so that's the down close, right? All right. So we are short. Let me point this out. Tells you right there in the DOM. Whoop. Okay. Right here. Let me use this instead. Right here. Also right here it tells you you're short. Your P&L is moving. Okay, and also on the chart. There's 3 different ways which this is telling you, hey, you are short the market right now. Okay? All right. We're short. We know this is a warning, right? But we're just watching. All right, so the rules. Okay, money management on the trades. If it goes plus 4 ticks in our favor, stop goes to break even. What's break even, Bert? Break even is your entry right here. Okay, we get the risk off the table. Okay? Now, in order to move our stop down, how do we do that? Here it is. It's right here. It's 8 ticks behind our entry. If you just, I don't know who that is. Let's shut down my emails. In order to move the stop down, here it is. Just left click over the number 1, drag and release. Left click over it, drag and release. That's how you move the stop. Okay, it's pretty simple. Okay, we're all clear on that? So we're looking for the market to get down to 27.70 and a quarter. So that would qualify for us to move our stop to our entry, or a close below the MA1, right? That will also set it, the stop to break even or entry. Okay, so again, this is our warning flag, right? Right here. So let's see what happens. Okay, so hang on. We can't move the stop down, right? It's got to go 4 ticks in our favor. The close of that candle lit the match. Okay, we identified that we were trending. We did the right thing. We zoomed out. Okay, Arlene said yes, yes. So that was a great observation. Okay, like I said, this is the warning flag right here. The fact that it was blue and starting to curl up. No, this doesn't surprise me. We're getting grief on this trade, given what I was seeing here. But let's see. Okay. Ideally, you want everything to be the same color. It's not always going to happen. Okay. That's a good question. If it's blue and flat, okay, like this, yeah, that's okay. Blue and flat, that's okay. If it starts curling up, then it's a problem. Now, you'll get a question like, well, that's 25 degrees or 20 degrees or whatever. If you have to ask yourself the question, just don't do it. Okay? All right, so let that sit. I'll come back to that. Okay, we won't forget it. You guys understand what we did, why we're not doing it? I pushed a button just to show you a few examples there. But again, this is a problem right here. Okay, let's go look for something that might be easy. Okay, I'm back to crude. Okay, switch guns on you. We had a double top here. Okay. Draw the trend line, right? Get in the habit of drawing the trend line. Okay. Okay, I think the ES is moving again, so let's go back there. All right, ES is still in that range. Okay. I'll try to stay on top of this. If we get a close on below the MA1, then we'll move the stop to the entry. It's just right on the horizon here. Okay. All right, so I'm going to go back to crude because this, at least crude is doing something normal. The normal thing for the market to do, gravitate toward the BBC, and in the process, we draw a trend line, correct? That is how the trend line should be drawn, okay? Do we have separation? No. The cycle's blue. That's cool, but it's flat at the midpoint, and we don't have any separation. What we're looking for is something like this right here. Okay, see that? And look at the difference here. Okay, look at this. This is what we're looking for, ideally, over here. Okay, so right now we'll take that off the table. So crude made a higher high, okay, but we're not getting this set up on the divergence down below. Okay. All right. Natural gas. Has anything changed there? Notice the first thing I do, 1, 2, 3, zoom out. We're still in this range, so nothing to do there. Let's go back to our S&P. Okay. There is the close below the MA1. Left click on the number 1, drag it down to our entry. Right here was our entry. Okay. Now you might say, wow, that is really close to your entry, but those are the rules. Stick to the rules. Okay. Okay. The green line is ultimately doing what? Getting into the cycle, right? What do we expect to happen? Okay, we're stopped out at break even. Okay. That's not a surprise given what we're seeing here. Okay. No matter what happens here, the result is a break even. Okay. So again, to go through the process, just to highlight this, okay, because this was a good lesson. Number 1, Arlene says, ES is moving. Totally agree with you, Arlene. Good observation. We zoomed out. We were making lower lows. Perfect. Okay, second, we drew a trend line off the lows. We actually adjusted it one time. Okay, we drew the trend line because we didn't know if it'd get to the BBC. Not only that, the cycle was turning color on us, right? So the trend line was required. And not only was it required, we needed a close below it. Okay, that was the close below it. We had an order in it on the DOM to get short. Okay, we were proactive like Michael does. We got short here. This was the first down close below the MA1 plus 4 ticks, and our stop went to break even. All right. We made an observation. The cycle was blue, watering down the probabilities, but now we were getting that 45-degree slant. This action here is what I would expect given what I'm seeing down here. Okay, the result, break-even trade, move on to the next one. We were lucky we didn't get stopped out. Okay, so we're going to wait, see what happens next. Okay, all right, let's go to gold again. Okay, we have the bullish cross in gold. Okay, that's the MA1 crossing the BBC. It's blue, so we should be looking for buying opportunities. What's the normal thing for the market to do? Pull back to the BBC. What is the BBC? New guys, it's this green line here. Since we've got a bullish cross, what should you be doing next? Engaging your trend line. Why do we engage the trend line? Because we don't know if it'll get to the BBC. And if this cycle does turn color on us, the trend line is going to be required. Okay, so right now we're just standing at parade rest, waiting for the market to gravitate toward the BBC and the gold. Okay, if I zoom out, okay, we're going to be swimming against the trend here a little bit. Okay, but we do have some higher highs, so we'll see how that all works out. Okay, let's move on to the crude. Okay, again, that's the pullback to the BBC. Okay, the cycle actually is in no position to buy. Actually, it's in a scary position where it might actually go lower if you like those other trade setups. Okay, natural gas sideways. Okay, why is it sideways? Zoom out, zoom out, zoom out. A high here, and we got another high here. We're not trending, guys. Euro. Zoom out, zoom out. Not easy and obvious. Okay. Getting some divergence here. I'm going to skip that one. I don't like it's not hitting me in the face. Here's the British pound, and here's an example where the cycles turn blue on you, different color, but it's flat. Notice that that's a bit different than that S&P one where it was curling up. Okay, Swiss franc. Bearish cross. Okay, next order of business, draw the trend line. Trend line would start like this. Now it has to be adjusted like this. Okay, connect the dots just like this. Okay, red cycle. That's in good shape. The green line is above that, creating that separation. That's good. Okay, a lot of good things happening there. Zoom out, zoom out. Notice, different picture here. Get excited. Potential shorting opportunity. Uh-oh, double bottom. Okay, right here, right here. We're not trending. No trade. Okay. Okay, notice the difference, okay, when we zoom out. Sometimes you get hypnotized by the layout that Michael is doing, and he's doing it for good reasons, all right? But take a moment to zoom out. That will keep you out of some bad trades, okay? So the Swiss franc is off the table. You might see this, okay? Maybe the trade setup's here, okay? Maybe it's all there and you decide to do it. These are the kind of trades that sometimes those are your runners. And the reason why it's the runners, because there was support here. And once we broke this support, it just fell apart. So the momentum really kicked into the market. And you get these great trades, okay? But more times than not, okay, we're going to be stuck here in the range, okay? So you're better off just waiting for that trend line or that support line or resistance to be broken before you take action, okay? You're taking a risk on taking the setup, okay? The result can be a huge result because, it finally barged through the door after 2 attempts, right? Canadian, are we trending? Yes. Before, support here, no. Okay, there was support. Now we're making lower lows. All right, now I'm interested. Okay, again, zooming out can give you that picture. Mexican peso, Aussie dollar. Okay, Aussie dollar. Pull back to the BBC with the down close. There is the down close, just like the ES. What's the problem with it? the cycle is blue and starting to curl up. However, that is the candle that fires a short. Okay. This is a disqualifier to me because it's blue and starting to curl up. Okay. But that's how your trend line should be drawn. That is a down close below the trend line. If you're asking me, are we trending? We are. That's a pretty easy one. Okay. But right now, this is a little bit of a problem for the Aussie dollar. Okay. Same setup, just a different market. Oops. All right, let's move on. Let's find some more stuff. What's our ES doing? ES broke apart. Okay, so hang on. Are we trending? We're making lower lows. Yes, we are. Gauge our trend line. See what happens here. This is where we got short the first time. The result was a break even. But Bert, it did the normal thing. It went back to the BBC and failed. But look at the cycle. It was a hot mess. So now we're waiting. So we're waiting for the market to get back to the BBC here, okay? Just waiting. Any questions so far? We're looking for a shorting opportunity in the ES, okay? So that means if it qualifies, I'm going to be in the red here, left clicking, okay? This is where I'm going to push my buttons, right here, okay? Notice the buy stop and sell stop, okay? Our bracket's already set. I'm just waiting for the market to come back here. Your trend line should be engaged. Arlene, I would not. Arlene's question, would you wait for the cycle to get below the green line, or is the angle and everything else okay? So right now, here's what will end up happening, okay? If the market, okay, this is good. Now what's going to happen is this, if the market starts gravitating toward the green line in cycle is going to go up and it's going to create the divergence or the separation, okay? Correct. Linda, 5 ticks, correct. Much, you'll see that happen, Arlene. You're kind of looking forward after you've been around the indicators for a while, you'll start seeing that. Okay? So watch, you'll see it. See how it's starting to work its way up? So if we get toward the green line or the BBC, we'll have that separation. Okay? And then that'll answer your question. You still want the separation. But everything's in a position for that to happen. So we're getting excited about it. And then Linda, yeah. So whatever the high or the low is, add or subtract 5 ticks. A tick are these little things right here. Okay? Each one represents a tick. I'm just waiting. But it's falling apart. Get me in, get me in. Well, we're waiting. All right. So there's that separation, right, Arlene? Here we go. Come on. Hang in there, guys. We'll let it do its thing, okay? Come on up. We'll draw a trend line. If it's there, we'll fire away. Okay. 2 candles there, right? So now we can draw a trend line. Okay, so hold on. That's how your trend line should look, off the 2 wicks. All right, I'm going to hit the mute button, so hang in there. All right, we're back. All right. Blue line, flat. Okay, so trades are taking off the table right now. Okay, we got a few disqualifiers here. Okay, so we go like here. Let me start from scratch with the trend line. Okay, trend line started like that. Okay, then it ends like this. Okay, that's the trend line. This turned color on us, blue, so a close below this trend line is required. Okay, the warning is it's flat, but also starting to curl up again. Okay, flat and curling up. Now, so again, for the moment, don't do a thing. Linda, so this is for you. Okay, so listen closely. The high is 66.5. The low must be 65.5. 65.25 is the right click. Right click. Okay. 65.25. Okay. Okay, it made a new high, so let's adjust everything again to go through the practice. The high is 66.75. The low is going to have to be 65.75. Right click at 65.50. Okay. 65.50 actually doesn't even put us below the trend line. Okay, so that's the math behind it. Unfortunately, on the chart, we're still above the trend line. So you want to cancel that. Okay. Remember, this is blue. A close below the trend line is required. Okay. 65.5 is not going to get us below that. Okay. But do you understand how you do that now? 66.75 is the high. That's here. 1, 2, 3, 4, 5. Okay. All right. Let's see what happens with the S&P. All right. Back to square one. Okay. This is the crude oil. That was the pullback to the BBC. We noted this was a problem, but if you liked those other trades as advertised, that should be a eye-opener. I think Bart is in the room, that he would tell you that should be a setup there. Okay. But for the moment, crude is sideways. Okay. Crude is sideways for now. Natural gas, 1, 2, 3. If we get above this high, we'll look at getting long. But right now, nothing. Yes. Still hanging around here. So we're doing nothing there. The YM. Okay, the mini Dow. The tweak something here with you guys, okay? The YM moves fast. The NASDAQ moves fast. But some guys just, that's what they want to trade. So an idea for you guys, okay, if you're the YM junkies, that's cool. Go to the 8-tick range chart. Change the time frame from a 4-tick range to an 8-tick range. The only difference, and you notice how my bracket is set up, 16-tick stop. All right, see you, Mark. Okay, you have to adjust the stop. 18 ticks. All right, this will slow the YM down for you. Okay, it's the same setup. You look for the pullback to the BBC. You get in the habit of drawing the trend lines. You look for a down close. Nothing's changed. The NASDAQ, the YM and the NASDAQ. Okay, those are moving fast, so you might consider going on a larger time frame. Okay, yeah. All right, I'm going to take one quick look around. Going to the gold. Okay, we've been in a downtrend all day in the gold. This is our first pullback to the BBC. Okay, we have the separation. We have actually a blue cycle, and we have a separation. So there's a lot of good stuff here. My concern is we've been down all day. The gold's down 20 bucks, and I'm not interested in buying this. Okay, if I zoom out, okay, we are swimming against the tide a little bit. We are making some higher highs here. I'm not too thrilled about swimming against the tide. Okay, crude, again, sideways. Okay. Natural gas, sideways. Natural gas needs to get above this and this. And I'm not talking about poke its head above it, then come back down. I'm talking about spending some time up here. Okay. Let it spend some time. Let it be easy and obvious. Okay. All right. Euro is kind of in a no man's land here. So the yellow line is the YBR. Okay. I have it up there. It's been there from day one. I just leave it up there. It just gives you a sense of trend. Okay. Don't worry about it. You can get rid of, if you have the YBR up, you can get rid of it just by doing that. Okay. If you have this brown line, one way to get rid of the brown line is if you right click over it, go to properties. Inside the properties box, see it says maroon, it says true. I think if you turn that to false, it gets rid of the brown line. Okay. All right. So that wraps it up. It's 2 o'clock. There's some good examples there. The takeaways are get in the habit of zooming out. Okay. That'll give you a chance to see whether or not we're trending. Get in the habit of drawing the trend lines. Okay. Keep an eye on the cycle. Ideally, we want the everything to be the same color. Okay. And if it isn't, then you know it's watering down the probabilities. And if it's curling against you, okay, it's a different color and curling against you, no trades. Just don't even consider it. Okay. Make sure they kind of hit you in the face. All right. And that's it. All right. So again, every Thursday for an hour, you're going to hear me go over the same things over and over and over and over. Okay. And those are like some of the little tricks and tips and some of the traps that people fall into. So if I can broadcast that out to everyone, maybe that'll keep you out of those traps that other people are falling into, unfortunately. Okay. So that's it. I recorded it, and it'll be decoded, and I'll put it in YouTube in the morning, unless I can get it up this afternoon. Okay? See you tomorrow morning in the training room.